Dhirendra Kumar, CEO at Value Research, joining in on the show right now. Dhirendra, there has been this long-going debate about active as well as passive investing, whether or not look at actively managed funds, should you go in for index investing? What is your broad view on how these two should be treated?
No, one is that the way individual investors invest, they should be looking at actively managed fund, but that doesn't mean that index funds are not making inroads. Certain kind of fund have they have completely lost their relevance. They have lost the plot. The large cap, actively managed large cap funds, the large and mid cap fund, that big category, they are unable to beat the benchmark, and the reason is quite understandable. They have been charging. The cost of these funds are very high, and the index funds, and ever since SEBI mandated that everybody should be benchmarking themselves to the total return index, which is fair. So they are finding it very hard. The numbers are, and when I look at the SIP return, I'm not looking at point-to-point return. When I'm looking at the SIP return of the large cap funds, somebody would have done in the large cap fund. There are 71 of them, and over the past 5 years, despite doing the SIP, only 14 are able to beat the index. And when I look at it over the last 10 years, of the 41 funds that exist, only 11. So it is hard. Large cap funds have lost the ground. They are no longer relevant. If you have to invest in a large cap fund, consider the ETF, consider the index fund, because they are everything else being uncertain about markets and returns from equity fund. One thing is definite, the expense, and you are guaranteed to get lower expense with the index fund. But I think most individual investors looking at doing their SIP, their 5,000 rupee, 10,000 rupee in the multi-cap fund, in the balanced fund, they don't have that indexing option. You don't have the avenue to invest which is more conservative and allocation. So I would say that indexing is making inroad. Large caps have lost the plot, but for individual investors, actively managed fund. And when I look at the other sectors, of course, the only thing which can benchmark them against the Nifty, which is not a fair comparison, because individual investors don't have the index vehicles available for them for investing in the small cap fund. We don't have the small cap index fund, or we don't have the mid cap index fund, or we don't have the balanced fund index fund, balanced index fund, any kind of allocation available. So when I compare that, I think the opportunity in the Indian market for investors is in the sub large cap category, and I think mutual funds are adding value. I think the recent reduction on expenses might make them little interesting or impressive over a period of time. Maybe next 2, 3 years, 4 years, these funds might look, the actively managed fund might look better, because they have been forced, large caps will be forced to reduce their expenses, and they will look competitive, or it'll definitely stack up in the performance number. But as of now, they look ugly, large cap funds.
Okay. So, if you were to highlight, Dhirendra, or advise investors on how to approach index funds versus mid-cap funds, and what would be your choice there, what would that be? What would you say?
No, I actually sound like a stuck record. I keep saying the same thing every few months, which is, somebody getting started should start with a balanced fund, and balanced fund with a 10-year history of doing consistently well, and a balanced fund which is truly a balanced fund in terms that the equity category should be a multi-cap, the equity portfolio should be a multi-cap, and the fixed income portfolio should be consistent, a good mix of corporate bonds and other things. And so that remains. Choose balanced fund if you are getting started. If you have to save for taxes, choose a multi-cap tax saving fund, and that is it. Stop nowhere. If you are going to invest just 1.5 lakh rupees in a year, look no further. For most other investors, multi-cap is the way to go. You get, in fact, today I would just like to point to these numbers, that today the index performance looks impressive, and index performance looks impressive because the dominant part of the index, 3-4 stocks did exceptionally well in the last 1 year. And mutual funds can't really manage a portfolio like that. You know, actively managed fund, they are designed to diversify better. They are, and they cannot really take a position of, for 35% in 4 stocks, the way it is actually weighted in the index. So, so they have their constraints. But at the same time, I would say that don't consider large caps. If you have to invest in a large cap fund, it is better to go for that ETF. But for most common investors, the multi-cap fund, the large, the tax-saving fund or the balanced fund, they still turn out to be very promising choice for their SIPs to accumulate their savings and turn it into something meaningful.
Yeah, indeed. Dhirendra, so since we are all, are on the subject, you always believed that balanced funds for any new entrant into the market is the way to go. Any names or recommendations that you may have for someone who's just about dipping their feet into water? What are the funds that they could look at within the balanced category?
Yeah, even in the balanced category, I actually go by my choice of funds which are not necessarily the best performing on a point-to-point return basis. Something like Tata Balanced or, ICICI Prudential Balanced Fund, they turn out, or, the Balanced Advantage Fund, they turn out to, or there are quite a few options and they have long history. In fact, for most investors, the first challenge is to invest in a manner that they can stick around for a long period. And these balanced funds help you do that. If you do your SIP, or even if you once in a while make some lump sum investment and continue with your SIP, and if you do it in a small cap fund or a large cap fund or a mid cap fund, you will be disappointed. You will be driven out of the market on because lack of experience, not having how the whole thing works. Balanced fund help you develop patience, understand things, and then thereafter, after 2-3 years, move on to a multi cap fund.
Okay, Dhirendra, before we let you go, ED now with AMFI, of course, has been running this investor education program called NIVESH, and today we've hit a milestone with almost 10 lakh pledges, 1 million pledges coming in, where people have pledged to invest 1 day's income into mutual funds every month via the SIP route. We've been saying that it's quite a milestone that we've achieved. But we have miles to go, to largely explore the story of financial inclusion, as well as, getting more and more people to invest in the financial markets through systematic investment planning. Just as a closing thought, your reaction and your thought process or comments on this investor awareness initiative.
It's a good start, but it's not good enough because, 1 day's salary, you just look at it and divide an individual's lifespan. We are faced with great challenge. We will, 20-25 years you start working, you work for 20-25-30 years if you are lucky in this economy, in this, ever, rapidly changing dynamics. And after that, if you are going to live for another 30 years, which means theoretically you have to save enough in your lifetime so that it can take care of as much life left beyond retirement. And 1/30th of your income is not good enough. It's a good start. It is a good initiation because savings is not investment, and this is what this initiative is doing. But gradually investors must realize that they have to work hard, they have to earmark more savings, and it should be put to work. And early stages, put your money into equity. So congratulations. Good beginning for a lot of Indians who will be faced with, the demographic dividend which we talk about will turn out to be a liability 20 years from now if people don't manage their personal finances well.
Is there 9 p.m.
Okay. Okay, point taken. The effort will be made in that direction too. Thanks very much, Dhirendra, for joining us and giving us your sense of how to make the most of investing in mutual funds.